Jeff Kilian for the InsideTechnician.com. We are recording a real-time trade taken by myself employing the smart money trading methodology here today, February 11th, 2013. The time is 8:31 a.m. Eastern Standard. We're looking at a 1-minute chart on the S&P E-minis. The current price marked to the market is 14.1525. The level that was laid out on the 1-minute chart that you're seeing at 15.1475 was the level to be crossed from above to below and closed below in order to be in the trade with new volume behind it. That volume came in right here at this point. Right here, that level is on the volume that acted as the reason for the close below that level right here at about 2,177 contracts. So the smart money trading methodology is in this trade. We have clearly defined price profit targets to the downside. We're looking to pick up 3 points on this trade and get out on a rally. Now, the way this methodology works is that it is very, very selective and looking for only the true high probability trades. That defined is essentially, in the short explanation, a series of indicators that have fired within a specified period of time, all having different parameters. The most time-tested and back-tested out indicators that have proven themselves for the past 15, 20, 30, 40 years. Now, as you can see, the prices continue to move down. Right now, marked to the market is 15.14, flat right here. So let's go back and take a look at some of these 15-minute indicators and talk about these for a minute here. In this case, we're looking at a Chaikin money flow. And the Chaikin money flow clearly was on an official divergence, indicating that the overall bias was to the downside, that the short trade could be imminent. Now, when we look at this relative to the prices, we always want to make sure that we're at the upper region in this case for a true high probability trade so that we have a lot of distance to get to on a downside. Here, take a look at the shorter term money flow index. Clearly, much more downward momentum before the trade was ever taken. Something that I want everybody to see here as well is the gap on the 15-minute chart from here to here, indicating weakness within the price chart pattern itself. Tell them I'll call right back. I'm in a trade. Please take a message. Yeah, thank you. Okay, more price movement to the downside. As you can see, 15.1375. 15.14. MACD indicator was on an intermediate term negative divergence. The cross was here before the trade was taken. EMA is crossed in this bar right here. 8:30 a.m. bar. More movement to the downside. In the money in this trade. All quiet environment. Stochastics momentum index had crossed here, right here. Our chief leading scout, 8:30 a.m. bar, 15-minute chart. So we were clear according to the 15-minute indicators that we're using to find, track, and trade the smart money. If we go back a little bit here and take a good look right here at this point at about 5 a.m., it's clear that if you blow this up, we do have a substantial amount of volume that's come in at this point to pick up a trade right here. Blown up. A sell-off for the down move. Getting closer to a price profit target here. Short trade, Jeff Kilian, Chief Market Strategist for the Inside Technician, now trading 15-13 mark to the market. Time is 8:36 AM Eastern Standard. Today is February 11th, 2013. E-mini short trade real time recorded. Okay, let's talk about that price profit target for a moment here. The preferred price profit target for my money, it could be as far to the downside is 1508.25. We have a current support level that's laid out at 1512.50 by the charts on the 15-minute display here that has been laid out by these prices, broadcasted out to the future. We are just about there. Just about there. $15.12.50 initial price profit target. Okay, let's get back and let's take a look at the N. On the 1 minute chart right here, very close to that price profit target on this down move, way in the money here on E-mini real-time trade. A lot of work to present this. Recording in real time and trade at the same moment. A lot of discipline involved. I think the most important I could think of to say to anyone who wants to trade this market in real time like I'm doing right now is that we need to be very selective about the trades that we take, so that when we take them with a lot more confidence than any other type of trading. We need to find a way to really track this smart money, to find these people who actually have the ability to move prices from one level to another, and fade those moves, but only when we have everything set up in our favor. 1514.50. $15.12.50. Here's a price profit target at 1512.50. An initial price profit target at 1512.50. Laid out by these series of data points on a 1 minute chart right here. blow off volume, sell off here. The level to get through was 15.14.75, filled at 15.14.50. Volume came in to make the cross. 15-minute indicators were clearly lined up, as we discussed. Next level to the downside right here. Just a little bit lower. Just laid out by these prices. Real-time trade identified by the smart money trading methodology I designed over 17 years ago. Presented to you from the InsideTechnician.com. Looking to get to the initial price profit target of 15.12.50. Possibly even to this level right here. To close 15.12.25. Let's go back and take a look and see what's the current state of the 15-minute indicators. The thing that may act as a reason for this trade to be short-lived is that the MACD doesn't have a lot of room to go here to the downside of its internal levels. This level was clearly almost reached. There is a previous where it was here, just about a quarter of a point above from these prices. So let's see how this plays itself out. We may have to get out of this and lock in a profit that we've already earned and keep it positive here. $15.13.25, 15.13, 50, 15.13.25. Mark to the market in real time. Looking to get to 15.12.50. Get our 2 points minimum. The larger picture of this trade is a price profit target that is below. That price profit target has been established at a 3-point gain, giving us from the get-go a risk to reward ratio of 3:1 in order to take the trade. What we're seeing here are incremental levels that act as price profit targets on the way down, where prices may find stall out and reverse. If they do, we're out of the trade to lock in a profit. Always monitoring the trade in real time on a 1-minute chart to manage this trade so that we don't give a lot of money back if we have a correction. Price is stabilized at 15.13 flat, real-time trade. S&P E-mini futures in the trade right here at 15.14.50. 8:31 AM Eastern. Okay, a little more movement to the downside here. This is positive for us. Price profit target again is 15.12.50. On an incremental price profit target to the downside. We are in the money. We'd certainly like to see some more volume at this point to act as a reason to not only get to that level at 15.12.50, but to trade right through it and get to another level to the downside. Let's back up this chart here real quick and let's take a look at the larger picture. At a lower level here, clearly giving us 3 points on the trade. However, in the event that this blow off to the downside before prices turn back around, this blow off to the downside is never reached, we will exit the trade with a profit at a higher incremental level. To employ good risk management. $15.13, mark to the market, $15.12.75, $15.13. A larger picture of the volume that acted as the reason to be in the trade right here. 8:31 a.m. traded 2,177 contracts. This additional volume that came in here at 8:36 at 2,700, and again here right after 8:37 at 32.36 on a close for 15.12.75 could be the volume that will act as the reason to get through here. We have an additional increase in volume as well if we take a larger look here at this point, trading through the 21 period average volume. Very interesting trade. Again, this trade is taken because it was identified as a true high probability trade, not just any trade. When we're trading for a living, when we're trading as a professional, we need to understand and never forget that risk management is the key to longevity and staying in this business. As I always say in any seminar, any presentation, mark to the market now 15.13.25, 15.13.25. This could be it. Stabilizing at this level now, 15.13.25, 15.13, 15.12.75 down here. Sideways trading channel established between here and here. So now again, if this trade goes to the upside, I have no problem with getting out of this trade and locking in 2 points. Let's see what the 15-minute indicators have to say. Okay, we've got some up movement here now on this as well. 15.13, I'm getting out of this trade real soon. 15.12.75, 15.12.75, come on. 15.12.75, out of the trade. 15.12.75, confirmed out of this trade. Under the pretense that we have a temporary stall in prices, the 15-minute indicators on the money flows had a very short-term correction with a new 15-minute bar that was trading to the upside, locking in a profit, 15.12.75. Let's mark that up. Now this trade may very well break through this level and trade down, but at that moment, not being able to foresee the future, 8:49 confirmed. Yes, I got it. I've got it. I will. I'll call him back shortly. I understand. I'm just about finished. Okay. Please excuse the interruption on the recording here. We have a lot of things going on at the same time here today. Okay, so let's talk about the roll-up for the trade. 50 contracts traded. In at 15-14-50. The out at 8:49 was not here. Correction. The 8:49 bar that you saw me get out at right here at this point. 8:49 on the low at 15.12.75, as you saw in real time. Now the incremental price profit target is getting touched 3 times. However, it has not traded through that level, probably because we don't have this type of volume to act as a reason to get right through this level. Now, anytime we're talking about this type of trading, the longer the time horizon for the trade, the more the open risk element of the trade gets elevated. So the hold time is critical for me. We got in and we got out here just after the rally ended, before we had a chance to give something back, because the money flow indicators had started to turn up, and this indicated a stalling of prices was evident, which is obviously the case here after the fact. Even so, it's actually good for the session demonstration. So in at 15-14-50, again to roll it up, and out at 15.12.75 is a 1.75 gain. Again, confirm 1.75 gain. Yeah, just put it off to the side, please. Thank you. Yeah. Yeah. 15, 14. Yep, we're good. At 1.75 gain times $50 for every full point move in the S&P 500 E-mini futures is a gain of $87.50 per contract. 50 contracts were traded for a net gain in a trade of $4,375. Now, we're going to report this tonight in full on the nightly market intelligence report. For those of you who are not familiar with the Inside Technician yet and the services that we offer, the best way, the most risk-free way to get to know us is we offer a 14-day trial for $1. And then on the nightly market intelligence report, I literally walk through these real-time trades that I've taken so you can learn from it and understand how this methodology works. Along with that, we're really talking about expert market timing. So we're looking at the Dow, we're looking at the S&P continuous contract futures, so that we can know where we stand every day in the markets. From there, everything happens. Having the levels laid out, knowing the levels of the indicators themselves as they're related to the prices. And then we walk right into the primary market that we want to trade. And so for those of you that want to learn how to trade this market, or who even have an interest to trade the ETFs and more time the market, possibly when the market mirror funds, we also have on the nightly report the S&P 1500 highly organized sectors into folders, and we outline the ETFs that are traded against those. So to roll it up here, what we do have is a gain on the trade of 1.75 points. Traders who do this for a living, please understand that we are broadcasting this out to a larger audience, so please be patient as we walk through the numbers a little more slowly here so that everyone can understand. The thing that I'd like you to get out of this is that you know, we do have course material and we do have an executive mentorship program. We can cut right through the chase and get right into the bare bones of what it takes in order to trade this methodology profitably. So please bear with us. for those of you who have a more advanced level of trading. Yep, I'm just about there. Yeah. Less commission. Commission, everybody pays a little something different, between $2 and $4 a side per contract. Yeah. Okay, we're going to close out this recording. One thing I'd like everyone to see before we go is that here we have more sideways and movement. So we did the right thing by getting out of this trade at that time. Before we had a chance to give some of that money back, it appears that things are going to start to trade to the upside right now. So again, in at 15:14:50 at 8:31 a.m. Eastern Standard Time, right here with the volume. All the 15-minute charts were lined up in a true high probability trade that got us out at 15:12.75 on the low of 8:49 a.m. for a 1.75 gain times $50 full point move is an 87.50 gain per contract. 50 contracts were traded. Left a net gain in the trade of $4,375. This is Jeff Kilian for the InsideTechnician.com. Please join us. Become an Inside Technician on the Nightly Market Intelligence Report. My pleasure to present to all of you today. We'll see you on the next Nightly Market Intelligence Report. Have a good day.